Well, 2025 will go down as the year that India's financial sector saw a significant amount of FDI coming in, both strategic as well as financial capital. We've seen deals in RBL, IDFC Bank, Federal Bank, and the largest to close out the year perhaps is the one with Shriram Finance and MUFG. Joining us now on the record to talk to us about this deal, what they intend to do with the capital that they get, and whether or not a bank license is on the anvil at all, is Umesh Revankar. Mr. Revankar, many thanks for joining us here on CNBC TV 18. Appreciate your time. Let me start by asking you, you're well capitalized. You didn't really require the capital, 20% tier 1 capital already. The rationale and the timing of this deal?
See, capital is always welcome. And when the capital is coming from a reputed international organization, that makes a huge difference for the cost of funds. And as we were discussing, we were looking for some kind of a large international partner for our growth. And when the right opportunity was there to take this, we thought we should take it. So one thing we are very clear that 20 is what it looks little higher above the regulatory requirement. But since we have an international rating, the 20 is something which is borderline.
Okay.
So you need to be above 20 all the times. So we were already in the borderline. So we were looking. Indian regulatory requirement or statutory requirement is 15.
Correct.
But since we have an international rating, so it was 20, and the international rating agencies prefer to be about 20. So we were always looking at that. And when we had a great opportunity of highly reputed organization like MUFG, then we thought we should take it forward.
Okay, so how long were the talks on? I know that this is something that we've spoken about and asked you previously as well, but how long were the talks on? And were there other suitors that you were also talking to? And what made you want to zero in on MUFG specifically?
We were talking to multiple people. It is not that it's just one team or one organization we were talking to. But we were looking at the appropriateness because being a lender here in India for nearly 50 years, we wanted an organization which has an international reputation and who have experience of being a partner in various other countries. MUFG is a one bank. If you look at their background, they have been a partner in Morgan Stanley US with 23% stake there. They also have the investment in Thailand, Indonesia, Philippines, and Vietnam. 4 countries. So Asian countries also, they have a very large exposure in the retail lending. So most of their lending in the Asia is in the retail.
Okay.
So I thought with their experience, knowledge, and the expertise what they built on digital platform, it will be a great suit for India so that we can play on their experience, plus the digital platform which they have built, which looks very robust, and we can easily have an advantage of what they have gained out of their experience in the other Asian countries.
Okay, I'll get to the synergies in just a second, but let's talk about the 20% stake. And there is a lot of speculation that they could perhaps look at eventually going beyond 20%. Has that been a discussion, a conversation that you've had with them? Are they interested?
See, the conversation can go on from 5% to more. So there has been a repeated discussion on how much to invest and what should be the long-term plan. Right now, we are sticking to 20. And probably with experience what they gain of the investment, then we may take a call. But right now, there's no talk of anything about going above 20%.
You're saying right now there is no call on going above 20%, but with experience, perhaps there could be an eventuality where you could see that. Would that result in an open offer? Will that result in a management change?
See, as far as they are concerned, they are very clear that management will continue with Shriram because we have a 50 years experience in India, plus the management depth they have seen. They have come and visited the branches, talked to the senior management team. They have seen the depth. So they're very happy with the depth. So there's absolutely no talk or discussion on management change. Management will continue to remain Shriram. And the way we run the business will be the Shriram way of doing business. I don't see there is any change on that.
But an open offer, do they have the appetite for that?
I don't really see that. We have not discussed on that right now. So probably as they experience India, if they are very happy with India, because right now India is growing at 8% plus GDP, and that really is the excitement they have, and they would like to see how India is growing. And with this kind of a capital coming in, and I think there will be a much stronger demand for credit in India.
So the door and the window in the future is open?
I can't say that now, because right now discussion is limited to 20% only.
Okay, limited to 20%. Let me ask you about the other piece that's being speculated on, and something that Uday Kotak tweeted about also, is this a precursor to an eventual bank license? Is that the plan? Is that the aspiration? Is that the ambition?
I can't comment on that, because see, the way Mr. Kotak's journey, if you see, he started as an NBFC.
Correct.
But immediately he moved to bank, because his constituency, where he wanted to address, where he wanted to focus, was maybe a bank. My constituency is different. I want to be in retail lending. I want to service the customers who are underbanked and unbanked. So, and there is a huge opportunity and scope for me being an NBFC. Whether I need to change that, I don't really see that now.
But what about MUFG? Does that, does the ambition change with MUFG coming in?
So that is something which we need to discuss over the period. I don't think this is the time to discuss about it. And a banking vehicle is totally different. And your constituency is totally different. When you become a bank, you need to be prepared for multiple services. You can't be just lending services. Right now, being a focused lending company to the self-employed and small enterprises, SMEs, we are focused on that. And there is a huge opportunity potential for us to service this particular segment, which is underserved. And we would like to prefer to be in this segment, because as per the own RBI's data, RBI and World Bank data, around 40 lakh crore is the credit gap in SME sector alone. Forget the other segment which we are in vehicle financing. So there is huge scope and opportunity. Why should I change my constituency? And that's giving me a good margin and good customer connect, and I'm able to do a lot more things with my customer. Otherwise, I need not do that.
Okay, so you need not do that. At least that idea is parked for the moment. But let's talk about something that you brought up, and that is the cost of funds. How much do you see an improvement as far as your cost of funds are concerned? What kind of a decline are you envisaging now with this deal going through?
See, right now, if you look at my balance sheet, my debt to equity ratio, which is around 4.3, 4.4. With the infusion of this, as and when the money receives, maybe it will come down to around 2.6 level. And again, there is a scope for me to increase my debt to equity ratios, so that profitability goes up. So the pressure on me to raise resources comes down to that extent, and therefore I'll be more choosy, and I can bring down the cost. My expectation is that I can bring down the cost by around 40-50 basis points incrementally over the period now. That's
a significant improvement over what you've guided, which is about 15 basis points at this point in time, right?
That's normal course, yes. With this capital coming in, it is going to be that much. And long run, it is going to be much higher, because with a strong balance sheet, our ability to raise resources at cheaper cost will further increase. So
can you lay out the trajectory on what you mean by in the long term you can see an even more significant than a 40-50 basis point reduction as far as your cost of funds is concerned?
We are AA plus and credit rating. We have been discussing with the credit rating agency for an upgrade, and if that happens, then there will be additional advantage. We will have a broader selection of broader sources to go, and that will bring down the cost further down. So apart from the strong balance sheet and rating upgrade, that should give us nearly, I believe, around 100 basis point decrease over the next 1.5 to 2 years, not immediately. Okay. It may take a longer time, but that will bring down my balance sheet cost of fund today is around 8.8.
Correct.
And that if it comes down to around 100 basis point in the next 2-3 years, that much I can pass it on to my customers. Ultimately, how much we are able to pass it on to the customer and make them more comfortable, that matters a lot to retain my customer and grow the customer.
Well, let's talk about growth then, because that's the big question. What do you do now with this capital, which is quite significant, that's coming in? Does that whet your appetite to grow more aggressively? And does it change your portfolio mix as well?
I don't really see a change of portfolio mix because there is enough opportunity in our segments like commercial vehicles, passenger vehicles, machineries, and two-wheelers that are our major vehicle segment, plus you have SME segment, which is around 15% of the portfolio. So if you look at each of this portfolio, the demand is very high. Now, last 5 years, if you look at from 2019 onwards, commercial vehicle sales came down.
Yes.
And through the COVID, it came down further. And post-COVID, it has grown. If you look at the last 10-15 years commercial vehicle sales, you see that whenever the sales come down, when economy slows down, come down, it jumps beyond what it was in the previous peak by 20%. This time it has never even crossed the previous peak. That is 2018 was the previous peak. That means there is enough potential. People have postponed buying a newer vehicle for nearly 4-5 years, mainly because India upgraded the emission norms to Bharat Stage 6. And at that same time, there was inflation pressure. So most of the vehicle prices went up by around 30-40%. Therefore, many people have postponed buying or upgrading the vehicle. And I believe next 4 to 5 years, if India is growing at the current GDP growth rate, we should be upgrading most of our fleets. And also the new technologies are coming into the vehicles, whether it's a passenger vehicle or commercial vehicle, two-wheeler. As the new technology comes, the prices are going to be a little higher. So that will absorb most of the money what we have raised is what I strongly believe. So we should be able to grow more than 20% in these segments which you are in. Plus the SME segment is very vast. The opportunity there is multifold. So we should be able to really cater to the SME segment much efficiently rather than what we are doing now. We have been doing most out of the relationship now. So we should be able to build more on SME portfolio.
The kind of growth that you talked about, and a lot of it is because, as you pointed out, was pent-up demand on account of things like BS6, GST, and so on and so forth. But now with MUFG coming on board, with this deal getting done, do you accelerate the kind of growth momentum that you're already factoring in? And in terms of new opportunities, what kind of new opportunities, if any, do you look at? I understand that you will continue to double down on commercial vehicle financing, SME financing, and so on and so forth. But your AUM aspiration, does that now change on account of this deal?
Definitely, yes. There will be a higher AUM growth. We expect from 15% guidelines what we had given, we should be able to grow around 20% is what I feel, because we have enough branch network, depth in the management, we have a reach, we have everything to grow. We don't have to really build that to grow. Since I have that kind of a network and people, and also the constituency, my constituency is very comfortable with me, that the customers, I'll be able to really grow. So 20% growth is a comfortable growth for next 5 years. As long as India's economy is growing, the GDP growth rate is at what today, 8%, we should be definitely growing at 20%.
At 20%, at least for the next 5 years or the foreseeable future is what you're pointing out. But, you also talk about restructuring. What is that restructuring going to entail? Is it a restructuring at the holdco level? Can you explain to us what the restructuring as part of this MU entails?
Basically, what we're talking about is the credit business and the protection business. We have a partner. Yes, insurance. Yeah, life general we have. We also have AMC business. We also started wealth business. So we would like to make this as a two broad segments. And the lending segment will be a totally focused one, where MUFG is going to be a partner. And the rest of the businesses are going to be with the Sanlam and other partners, if there are any. So like that, we are differentiating and making it. That's a plan, that's a structure which we are proposing. That is at a holding company level, is nothing to do with SFL level.
In terms of metrics now, and you gave us a very clear indication of what the cost of funds will look like, but in terms of other metrics, whether it's return on equity, etc., what could the next few years look like? What are you working towards? What are the targets?
There are multiple moving ratios here. Definitely the ROE will definitely come down because of the large capital infuse. But ROA will go up. So as the ROA goes up, then ROE will definitely go up. As we are able to leverage more, the ROE multiple will go up. That's how it looks like. But you have to see other moving parts, like net interest margins are going to go up because of cost of fund is coming down. Our credit cost is going to come down because we are going to onboard a customer with higher credit profile, better credit profile. That is going to bring down my credit cost to some extent. So this, and with these two in between, margin and the ROA, definitely the ROA will move towards from 2.8 now to around 3.6 level, and multiple of that as I leverage nearly 4 times, and that's the kind of the ROE I'm going to get. So ultimately we'll move towards 15.5 or 16 in next 5 to 6 years, what is there today. So the growth trend is very clear, and all the ratios will be more positive year on year, and that should be the way we should be working for next.
As far as the margins are concerned, you did point out clearly that you expect a margin expansion on account of this deal going through as well. What will the margin expansion trajectory look like over the next few years, you think?
The net interest margin could reach to around 10% because of the capital being there. Capital getting deployed will bring down your cost of fund to some extent in the next 2 to 3 years. So then over the period it will moderate. So that's how it will look like.
The regulator, of course, the regulatory process will now start with the agreement being inked. What are the timelines that you envisage? And I'm sure that there would have been an informal check with the regulator on whether this deal has their blessings or not.
See, we are going to put the application now. Definitely, we are in touch with the regulator for various other requirement purposes and also for a dialogue. So these are all things we have to be taking, the other interested organizations or parties or regulator in touch. So I believe they are welcoming this because it shows a lot of confidence in India's growing economy. That's one thing. And large capital coming in retail lending definitely help the credit growth and also the consumption, indirect consumption or direct consumption. It also add a lot of asset getting created. See, we are one organization which has always focused on lending against asset or for acquiring an asset. So asset creation gives a lot of opportunity for individual to progress in his life and building a sustainable income. So whether you are buying a taxi or buying a truck or bus or machinery, all this will add to your ability to improve your income. So that being the case, I feel the regulator will definitely be very positive about it and hope everything will go on time.
What's the indicative timeline by when you expect all the clearances to come through?
We have given a 3 to 4 months window for everything, but hopefully would like to get
close it earlier,
faster. Yeah.
So how does life change? Assuming that within the next 3 months you will get all of your regulatory clearances in place, how does life then change when the clock starts ticking from then on?
See, we are already preparing ourselves for faster growth. So as and when it falls in and the money comes in, the next is the growth. How do we speed up or how do we plan our growth? Already it has been planned, But then the acceleration starts, and the
so that's what I'm trying to understand. What if you're assuming you're in third gear today and you're going to the fifth gear? What changes between now and then?
See, change is once you go into fourth gear, what happens when you drive the vehicle?
Yeah.
Then you are able to see the visibility much better. And you are able to maintain your speed and control in much better way. So you are in total control of what you are doing. So that's how I think moving from fourth gear to fourth gear will give us that kind of a comfort, smooth ride, and that will definitely be helpful to everyone.
They've got 2 board seats. What else changes on account of this deal from a governance perspective?
The best practices, what the MUFG Bank has, is definitely will come in. Apart from their expertise, their knowledge, that definitely get added. And probably our people also would be able to visit some of their investment, some of the companies where they invested and try to see what they have done differently or unique. We would like to be a unique player. We don't definitely want to copy things, but that learning will help us to improve our management and efficiency. Ultimately, efficiency improvement is a productivity gain, and that will result in your better credit cost. That will result in better ROA and ROE.
So, you talked about how this is in a way a vote of confidence for the India growth story. It's a vote of confidence for the Indian financial sector. What do you make of the list of deals that have been inked this year? As I said, both strategic as well as financial, a whole bunch of deals getting inked in the banking sector, but also in the NBFC space. Yours, of course, the largest FDI into the sector, at least up until now. What do you make of this?
So
and does this change the competitive intensity of the business as well?
So what I understand is, India being now the engine of growth, among one of the largest economy engine of growth, a lot of interest is there in India. So when I talk to people, meet people, I see a lot of positive things about India, which was not the case maybe some years back. So with that kind of a focus, interest, everyone want to have play in India, that really helps. So if you look at the India's growth story, the infrastructure is in place, logistics cost is coming down, manufacturing is improving, export is likely to have a much better impact because of all those things. And if there are the retail growth, which probably gives much better margins in the play. Any lending business, retail play gives a better margin. More people will be interested in coming to that. That's what I believe people are looking at right now. But these are all the positive trend. If at all you have, because if you, India government has talked about Viksit Bharat 2047 and a continuous growth of around 8%, reaching a 30 to 40 trillion. If that is the plan, and we as a responsible corporate, we also need to join this. I think that's where we believe there is a strong growth opportunity. And we should be able to attract much better capital coming into India. That's what's happening.
Well, you talked about all of the opportunities and, of course, the tailwinds for the business, so to speak. Any headwinds that you're concerned about today?
I don't really see a headwinds for India's growth story and definitely for us. Maybe a few things which may have to improve for to reach this to the masses is the rural infrastructure. I feel the rural infrastructure is still need to be addressed, because more job you create in the rural area, that is going to really increase your consumption. Because nearly 65% of the population depending on agri, which is only 15% of the GDP, that is a huge burden on agri sector. So if you're able to create more job out of the rural area, move to, that's where I believe the lending to SMEs or self-employed people more and more in the rural area is going to help the rural consumption, rural entrepreneurship, and for that maybe infrastructure, rural infrastructure is very important. I think that's where I feel the infrastructure bottleneck are there, which I believe government will look into it, and both central and state will address that.
So let me end by asking you, would it be fair then to assume on the back of what you've told us that perhaps the first area of synergy would really be on digitization and more digital expansion? Is that what you're going to be leaning on as far as MUFG is concerned?
Yes, digital play definitely yes, but our basic business model is a customer. We will never onboard customer remotely. We would like to build a relationship with our customer. So even when we strengthen our digital play, our customer interaction or customer meet will never stop. So we'll definitely be building a bigger infrastructure to reach the customer, adding more number of people. So
how many people were you planning to add, and on the back of this, how many people will you now add?
I think we may add around 5,000 people per year on an average for next 4 to 5 years to keep up the growth.
And any geographies in particular where you would like to accelerate your presence?
See, we have excellent presence in south and west. North, central and east is a little lesser. Maybe we'll be able to create a bigger reach there and grow faster there.
Okay, so let me end by asking you if investors are looking for a snapshot of the key numbers that you're going to be looking out for and the numbers that you're going to be targeting, lay out for us what that snapshot over the next 5 years is going to look like.
See, basically, I can tell you, a snapshot means a 20% on the top line growth, ROA growth from 2.8 to around 3.5, ROE coming down a little because of the higher net worth and going up over the period next 5-6 years back to where we are. And that is what a broad snapshot I can give you.
Well, confident on growth and confident on the future now with this significant deal behind you, which has taken almost a year in the making. What's been the biggest challenge of getting this deal done?
See, I have been discussing with multiple investors or multiple organizations in the last 1.5 years, because we were reaching 20% of capital adequacy, we were looking at the next 5 years or 10 years. And when I was looking at, I thought if I get a big international partner, I can look for 100 years. So when I say 100 years, a good partner like MUFG Bank, who if they are interested in India, then I can definitely think of a much larger story. So that's how I looked at. So 20% is a huge support, and that gives me a long runway.
Well, we wish you the very best of luck as you start this new journey with MUFG Bank as your partner, and look forward to hearing more from you on the opportunities that you see on the road ahead. Mr. Revankar, many thanks for joining us here on CNBC TV 18. It's been an absolute pleasure. Well, that is the big newsmaker and the big deal of the week. From all of us here on The Record, thanks very much for watching. Stay tuned to CNBC TV 18. We'll be back in a moment with plenty more.